we do this retracement analysis where we look at the last time we moved and we compare it to this time it moves and all of that good stuff. We've talked about that week in and week out. So let's take a look at some of the numbers we've been looking at. So first of all, in theory, if we're still in the downtrend, then we would be, whenever we move against the downtrend, we would be doing a contraction phase, a range contraction phase, basically testing that downtrend. And if we were testing up, I just want to give people kind of the gauges that we're using. If it only pulled back a little before going down again, we would consider that weak, a weak downtrend. I'm just going to put the letters DT here. If it pulls back about halfway, we would consider that a nice strong hint at a downtrend, especially if then it continued to move down and move down with some vigor. So moving to about here, and that's supposed to be the letter G. Don't worry about that. If it goes too far, again, we consider that a weak downtrend. And if it goes over 100%, meaning it retraces past the high close of the previous reversal, well, then we're going to call that a weak uptrend. And then if it really goes past, and we have this mark here that we used, 123.6% past, we start calling that a strong uptrend. So we actually have to come to the conclusion that we are no longer downtrending, that indeed instead we're uptrending. So look at what happened here. And it looks like we're about to get a confirmation down here. So I use this 3 and 5 day exponential moving average to get a confirmation around, whenever we get a crossing, that's a confirmation that you indeed have seen the top. And so this was our top right here. You can see over here, we have to let a few days go by because sometimes we get these tests and they don't actually do the crossings like we see here. Like these little guys are tests. This might just be a test. So we're going to let it a couple days go by because the S&P could totally fake us out like it did over here and go for yet another high. But right now we've moved, right? We were watching this 4,600 number. We wound up closing above that 4,600. We actually are now thinking that we should be changing our thoughts and considering this now, instead of a downtrend anymore, we're beginning a weak uptrend. And we'll let this thing pull back and we'll see if this was actually a top being found. We'll see if this is a real crossing in the next couple days. Then we're going to be watching the pullback to see how far we pull back and then the move up. This could be a new uptrend that we need to be following. We were doubting it for weeks, but the S&P trudged higher before it started to reverse. So we're in this weak uptrend, at least according to this analysis method. And so I'm starting to, close down my positions that would profit if the market was going down. I'm starting to close them down. I'm not ready to open positions in the upward direction. And as far as my premium selling positions, the sideways positions, those just keep going on like clockwork.